how it works. Um, so besides that, like that's the goal. Your goal isn't like I don't recommend for anybody to go more than past 5 contracts of anything. Always do micros. Micros are easier to buy, is easier to use. It'll make more sense. If you go in buying ES, the regular ES, like you'll see like one ES is literally about 1 ES is about 10 micros. So 1 ES you buy here, you're buying 10 micros over there. So I always tell everybody stick with MES or MNQ or MGC. Those are the easiest ones to trade because you're able to buy more contracts of them, right? And you don't need, like, respectfully, you do not need more than 10 contracts. If you see yourself buying more than 10 contracts, you're pretty much gambling or you don't know what you're doing. That's just the straight, honest, and brutal truth. Like if you're doing more than that, you're gambling because, like a lot of traders, even in this Discord, like you guys will see, there's traders that you could buy randomly here at 50 contracts or like 10 contracts. Boom, you're making money, great. And then you build that same habit, and you go into XFAs. If you're buying more than 10 contracts, you're gonna blow that account within like literally 5 seconds. I've blown XFAs about the same day. I blew it the same day it happens. The same days I would reset a combine, I would blow the same day. I had a combine at 3 o'clock. I blew it in 3:05. It's very easy to blow accounts if you don't have discipline. Because if you don't have discipline, all you're gonna do is cycle back into the same loop all over and over and over again every single day. So what you want to do is how to avoid that is because you got to understand how to walk away. If you don't understand how to walk away, you're gonna have trouble. You're gonna just be looking at the market all day. What I suggest for everybody to do is go to the manual lockout. Once you make like at least $200-300, lock out, call it a day, and that's it. There's no reason for you to keep going back at it. If the market is choppy, you don't want to keep trading that because that's how you blow accounts. It's not worth it for the long term. Is definitely not worth doing that because like I said, you build the same habits when you go back and do it on funded accounts. It's just the same exact thing. Nothing will change. If you build good habits now, you'll have the same good habits when you go to XFA. That's something I want you guys to actually understand because a lot of people think that when you first start, you're gonna make shit ton of money. Yes, you will. You'll pass those evals within maybe like the first 2-3 days, right? Like I'm not gonna put somebody in the spot, but my boy Roberto, he knows that. He finished eval so fast and everything. It was amazing. He did absolutely amazing. He reminded of me when I was trading before, and I used to pass eval so fast. But the thing is, reality checked in when the market will literally humble you to think that like you're not where you need to be. You know what I mean? You need to build those disciplines and be able to read the market, understand when to walk away. If you don't understand that, all like I said, all you're gonna be doing is this. This is all you guys are gonna be doing, literally every single. It's just going to be a loop. You're just going to be in that loop until you understand that the market doesn't give a crap about your feelings. The market doesn't care if you lose money. The market doesn't. It doesn't care about your feeling. Your feeling has no factor. It's just about you. Can you control that feeling? So until you can control that feeling, you're not going to understand what's going on. Futures is so much easier to trade than options because there's no theta, there's no delta, there's no Greeks. The minute you buy, the market will print for you money or the market will destroy your account. It's one or the other depending on how you read the market, right? So that's the other thing. What I do, what I trade is two things. I trade PO3s and I trade fair value gaps. For example, let's take Friday's session, right? Friday's session, let's go to the 30 minutes, right? Clearly, we can see there's a PO3. If you can't see it because you haven't been trading with the PO3 model in a while, but there's a PO3, and I'm going to show you exactly. This is the Asia session right here, this range. This range to this range is Asia, and this was London, right? So you have Asia and you have London. What Asia and London completely did was they were accumulating this whole entire range. You guys see that? They accumulated the whole entire range. That's step one of PO3. PO3 first step is identifying accumulation range. So you guys can see it's bouncing off this range, is building up liquidity. Now, the second step is, do you see where market is hunting liquidity? You have to be able to identify that. Market is hunting these equal liquidities right here, right? There's a stop loss here that market didn't want to go below. But what happens when New York session opens? We literally took this low. We completely took this low, right? 100% took this low. You guys see that? We took this low. This is the second stage, the manipulation. This whole entire thing, market accumulated and manipulated, took out some sort of liquidity. Manipulation happens when market takes liquidity, not randomly. Before I used to think manipulation would just happen randomly. However, it took me this year to finally understand market takes some sort of manipulation is when it takes some sort of liquidity. You have to understand what liquidity is. It's always these are liquidities. You see how market goes to a certain price range and it rejects. These are all liquidity levels. This liquidity here, this liquidity here. I could spot all them liquidity. You see, these are equal liquidities that I expect market to eventually take out, and it will. You just have to understand when and why it will take that out, right? These are when there's equal liquidities, they're a point of interest. Like right here, these two are equal liquidity, which is a point of interest for the market to come back down and take that. So you identified part one, accumulating in a zone. Identify number two is finding liquidity. You found liquidity from the previous day low. You target that, market takes that down. Now you found manipulation. What your goal is, if price action is accumulating and manipulating to the downside, what do you expect? Your bias for the minute for distribution to go up. That's how it works. This is how PO3 works. If it manipulates one way, it's the reversal. That's what smart money concept is. So for example, it's the same thing. If it accumulates and goes up, it must come down. That's how PO3 works, right? So once you got this manipulation low here, how you want to enter this is on fair value gaps. So fair value gaps is another thing what I like to do. So if you guys could clearly see on the 30-minute, we have a nice fair value gap right here. Let me show you guys right here. See this 30-minute fair value gap? That's how you enter. You don't want to enter blindly because there's also a fair value gap right here as well. If you really wanted to catch that low, you could have caught. There's two interests you could have caught: this fair value gap and this fair value gap. Whichever one, they're both perfectly fine. They both work completely, right? So now what you want to do is, since you identified where market took the manipulation low and it took liquidity, you want to see, okay, well, how can the market do the reversal? What you want to check is check the higher time frame and then go back to the lower time frame. Now what you want to do is I look from the 30 to the 3. When I do the 15, I look from the 15-minute to the 1-minute. That's how I like to trade. So now I'm looking at the 30-minute. Yes, we swept the low. We came back, right? I want to see price above this range so I could take a long position. What I like to see is price action disrespect this fair value gap, because when you look at the 30-minute, this is a bearish fair value gap. In order for this to be disrespected, you want a candlestick to close above and take your position to near side liquidity, right? Your internal liquidity, if your internal liquidity is, see the market is over. Your internal liquidity is here, 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 and here. All these liquidities that market never took out, these are internal liquidities, right? You see all that? That's all liquidity, right? So what I expect right now is market. So when you go back down to the 3-minute, right? Let's see. So right here, you see how market disrespected. So what I want to see is I want to take a long position, because your bias right now is that you're bullish because the manipulation was to the downside. So you want to find the disrespect, and you did right here. That even if you got it over here, your stop loss is below the wick of the previous candlestick, which is here, or you could sometimes put it on the fair value gap, depending on where you entered. So if you completely entered right before it jumped into it, you can put your stop loss at the low of the wick. Target the nearest liquidity. Liquidity is here, liquidity is here, liquidity is here, and here, right? So when you get to first TP, you want to take profit number one, right? Your first TP is the highest of that internal liquidity. This is about a 30 point. So if you go with 5 contracts of MES, you're roughly making around like a really good amount of money, at least $800 plus just on this play. Because 10 MES, when I do that and I go to like 20 points, I'm making $1,000. So when you do like 5 MES, you're making around like $700 to $800 just on this one play alone. That's how you catch these fair value gaps and the PO3. This is how you use them. And then if you held for longer, like if you held for longer position, you could clearly see that like we went all the way to the top. We took every single liquidity, even the news high liquidity. We took that out completely. You see that? That's about 85 points. Imagine just holding that through, right? So clearly, a lot of people will not hold it through. A lot of people will sell at their first TP. Like even for me, I will sell it at my first TP. Yeah, that's the one. Yeah, zero. That's the one I'm talking about right here. This is the first bearish fair value gap that was disrespected. So you could take it here. Even if you took it from here, the second entry was right here. Even if you took it on the second entry, you see how. Let me delete this. Let me show you guys. You see how the first one respected it, second one respected it, third one disrespected, Fourth one didn't close in. Then we got respect. So what happens here? The reason to know when to enter here, you need to have at least 3 to 4 candlesticks closure above the fair value gap for it to be a confirmation. So here, the reason why I would enter right away, because like you could see the previous candlestick how bullish it was. Like it's full body. Here you could see it's not full body candlestick. If this was a full body, this would automatically keep running. But you see how there was a hard rejection. I would note that price action would want to come back, regain some momentum, meaning grab some liquidity, and then push back up higher, which is what it exactly did. It grabbed this liquidity here, right? And then look what happened. Immediate pump right after. Because if you identify the trend, it's a bullish trend. And you also know that because you looked at the 30-minute, you saw the PO3 form, you saw the PO3 accumulation, manipulation, and then distribution is to the upside, right? So when you're able to identify that, you know that all market simply did was just grab liquidity just to go back higher. So even if you got your second entrance here, right, you could have still caught a very nice move. Like if you think about it, if you caught to this liquidity and this liquidity, this is about 32 points, you know. So that's literally all how I trade. Like I don't trade anything different than that. I do PO3s and fair value gap. Even for example, even if there was no PO3 in this time frame, if there was no PO3, all I simply would do is look at the higher time frame, the 30 minutes. I would simply, even if there was nothing else, I'll simply just wait to see if price action disrespects any of these fair value gaps. If it does, great. I'll take a position because you have more of a 80% chance that this fair value gaps will work. But the only way I like to see when price action disrespects because it gives you a better chance. When price action respects it, you know you're gonna follow the same exact trend that is currently in. You know what I'm saying? Um, this was actually a really good point of interest that I wanted a price action to come down to, and it actually did right here. I had a screenshot of this one right here. You see how we have this 1 hour bullish fair value gap? You see how it's slowly disrespecting? So what you want to do is you want to go to a smaller time frame, right? And then you just look. If this is disrespecting, you want to have your stop loss at the previous um, high of the fair value gap, and then just target near side liquidity. Liquidities are here. This is one of the main one that market would try to hunt. You see this liquidity, eventually market will come down and take this liquidity no matter what. There's liquidity there and there's also liquidity right here. These two are point of interest for market to come back. However, in this case scenario, there's a big gap that market needs to fill out before it does anything. So you see this gap? It just left. That gap needs to get filled out no matter what. It has. It's like it must. There's no other reason. But market simply needs to fill this gap before I could do anything else. This gap will get filled no matter what. If not right now, London session, whatever session it will be, it will get filled out. How do you make them boxes? So the boxes, you go right here. You go to rectangle. You press that, and then you just go on the settings right here, and you go to style, and this is my style. The border black, medium, whatever it is, right? That's how I draw it. So I'll just chart with you guys what I think is gonna happen for tomorrow. So I have the 1 hour gap
Hey,
right here.
I have a
Yeah,
question real quickly.
what's up?
So how do you set the stop loss on there?
How do I set the stop loss?
Yeah, like on a
So
trade.
all right, hold on. Let me not share this part of the screen, but I'm gonna show you guys one sec. Let me show you. Hold on.
Sorry.
Yeah, no, I got you. No problem, no problem. Hold on, let me show you guys so you guys can understand. Let me see. One sec. Let me show you guys. Show you guys. Let me show you guys. Hold on, my account is just loading. Let me just give me one sec. Just gotta refresh it. Okay, let me show you. Let me show the account. Um, okay, hold on. Let me stream it again. Okay. You guys want to see something? All right, right here, right? Look, so this is on the practice account, right? I'm gonna show you guys very simple. Let's go to MES. You see how you see how this says MES, guys? And then do you guys see how this says MNQ? Let's say if I place the order, you know where this will go? To MNQ and not MES. So you gotta, like I said, make sure it says MES. So MES, right? Okay, for example, if I think I'm bullish, right? Right? I'm thinking I'm bullish. I'm on a practice account. I'm thinking market is bullish. I press buy five. You see how it says order failed? So what you want to do is, if you're buying, you're doing calls. So you drag it up to, let's say, for example, you want to fill that gap. You put your stop loss at wherever you think you want to put a stop loss, a decent stop loss. Let's say I put it there. You see how with 5 contracts you could be up like $12 within a second, but down 12, $18 or $20 within a second. This is how buying and selling works. So if I think market is going to go up, I'm pressing buy. If I want to add more to this position, I don't press sell. I press buy again. You see how it averaged down and it brought. But like I said, now your take profit is higher, but so is your stop loss is higher. Make sense? So I don't suggest you guys randomly just keep clicking, keep clicking, keep clicking. Because look, the more you do that, the faster you can lose that money. Because if it takes a second for it to drop really fast. You know what I'm saying? This is just practicing, but I'm just showing you. Like you see how the profits increase, but so is your stop losses increase. You know? And look how much, look, with 25 contracts, I'm down like 130 already within a second.
So how, what
You
if we
guys,
just like want to? What if we want to just like boom, like close a contract,
so you
with
press
like
right here. Look, you press close, boom, done.
where?
You didn't see that?
No.
So you press buy, and then
Yeah.
you see it close. You see the right
Oh
next
yeah.
to it says X. Boom, close, and it will pop up right here. On the
Okay.
bottom, it says trades. It will pop out. So now,
And then
let's say I
you.
think market is gonna sell off. I press sell, take profit here, stop loss above wherever you want it, and that's it. You guys should not be going more than this five. But if you sell this position here, if the sell works with you, it'll show you how much profit you're making, and it'll show you your P&L. Like right now, I'm up $12, right? And you look how quick it is to make that money. So how to trim? So how to trim? This is how you guys trim. Look, for example, if I'm in profit, if I want to sell like 3 contracts of this, like I'm gonna sell, right? So I want to buy these contracts out. I press buy three, and now I have 2 contracts left. But look, I'm on profit no matter what. You see that? I've just trimmed zero. I just trimmed like that. You see, you have to buy it. You see how with 2 contracts you're still at $40? You don't need that much contracts. So you just that's how you trim. You sell when you're up. Don't sell when you're down. It doesn't make sense. Either close a position or exit. So this is how you trail. And let's say you could keep dragging this. It doesn't have to be a set stop. You keep dragging this, and then with your stop loss, you could try to bring it to break even. Right here, you press B/E is break even. And if it touches that, it will break you out with $0. So you won't take a loss. You know. But however, if you don't want that and you want to hold it for a little bit longer, you could leave it like that. So with 2 contracts right now, I'm up $50. This is what I'm telling you guys. You guys do not need to exceed 10 to 15 contracts. It does not make sense. If you're new, please do not exceed more than that. It really does not make any sense. Start off with 3, start off with 5. I'm literally showing you guys live how to make $50 with just 2 contracts. Now imagine if you had 5 accounts, how much that would be. It's a lot. It adds up. You know what I mean? Okay, let's see.
Yes.
You guys see, look at that. And then what you want to do is, let's say I stop I stop this one, and then I cancel this, and all I could do is like, look, I could trail it. Look, now if it takes me out, it'll take me out for $20. If it keeps going down, I could keep trailing it. Look at that. See that? You guys see that? Look, trailing it. You see that? I'm still trailing it tight. If it takes me out, it'll take me out for $55. Look, I'm gonna keep trailing it. Look at that. If it takes me out, $57. If it keeps going down, it keeps going down. You know what I mean? Like look at that. Or I could just press X, close out my whole position. Look at that. Damn, market actually dropped. My analysis was right. Look, this liquidity is gonna get hunted. Exactly what I said. It was. Look, you see how it took me out? Did you guys see that? You see how it automatically took me out? That's how you trail. That's exactly how you should be trailing. If it takes you out, great. Do not go back. Like, you know what most people would do? So it took me out. Most people, what they want to do is like, they're like, nah, I'm going to go right back at it and attack again with 5. But like, if it doesn't go your way and it starts bouncing right back up, you just lost what you just made. You know, that's why I say build, just wait for the market. It's not going anywhere. Look, you waited this whole time to make $70. And now if you go back in with 5, you're down like $43. Like, was it worth doing that? Right? That's how you should play around with like your practice counts. You guys should be playing around with that. However, if it does go in your favor, then even better. But majority of the time, you should wait for a confirmation before you enter into any place. What was the other question? Someone said, how do we choose between 30-minute fair value and whatever? For example, All the times we were trading on the 30-minute fair on Fridays, the candle seemed to be in between the 1 hour fair value gap. So with the let me just close this position. Actually, let's just leave this and let's just see if it hits this TP, because that would be actually amazing. All right, I'm gonna leave that there. How do you choose? So what I do is I personally like the 30-minute, but the 1 hour is very clean. The higher the time frame, the higher it respects the fair value gaps. So like for example, like the 30-minute, you see how there's a fair value gap here to here? Let me get this indicator off. You guys see how on the 30-minute there's a fair value gap here, right? And then like look at the 1 hour. There's no fair value gap here. You know what I'm saying? So how do you pick that? The higher the time frame, the better the fair value gap is. However, sometimes to know which fair value gaps to pick, you got to see what's behind the context. Usually, when market moves really fast like this, it always is a fair value gap. However, on the 1 hour, you're not able to tell that, because if you were, you can't tell that on the 1 hour. The 1 hour, the only one you can tell is this one right here. This one right here. And not all fair value gaps will get respected. You guys gotta understand that not all fair value gaps get respected. Some get respected, some get disrespected, depending on what's behind, how much volume there is that's coming with the market. Like for example, right here we probably have a very high selling volume. Right now, I expect the fair value gap to be formed when we take this low. I expect another fair value gap to be formed here, because you got to also check what's the momentum that's coming with this fair value gap to get disrespected. Because on this 1 hour, it got disrespected, and then look, we pushed right very high, right above. We pushed like 32 points. So in order to determine that, you need to see what's behind. Like, is this a bullish trend for it to be disrespected? Is this a bearish trend? Does the market come back and respect this fair value gap and then go back down? You got to be able to tell that based on volume, based on the context of the market structure shifts. Like right here, we had a market structure shift right here. See how we closed above? We had a market structure shift from here. This was directly a bullish candlestick. Can you explain the fair value gaps? Fair value gaps are simple. So pretty much where one point doesn't touch another. For example, let's show the 15-minute. For example, right here. Oh, let me get this out. Fair value gap is when this point right here, you see how this never touched this wick? That's a fair value gap. That's where price wants to come back and respect, right? That's a fair value gap. See how this candlestick doesn't also touch this? There's a very tiny fair value gap. This candlestick doesn't touch this one. However, let me show you what's not a fair value gap. This wick touched with this wick. We're gonna hit last new low for sure. Yeah, probably. But like you see how this wick right here, this candlestick never touched. I mean, it touched with this candlestick, like it closed up. You see how the wick is above? So that's not a fair value gap. Fair value gap is when one wick doesn't touch another. Like right here is a fair value gap. This wick never touched this wick. So that therefore there's a fair value gap. What you like to see is either does price respect this fair value gap or does it disrespect? I personally like to see where price disrespects because you catch the bigger move. For example, if you caught this one during New York session open on Friday. Oh guys, look, remember the last one we did? Like, look, this is why it's not good to go right back in, but I'm just showing you guys an example of why it's not worth it. We were up $70, and now if we re-entered for no reason, like we thought market was going to keep going down, look how much you're down with 5 contracts. You see what I mean? You have to be patient and just wait, because the market will give you endless amount of opportunities to come back down. It needs to grab liquidity before it comes back down. So either you choose to close, you can add, or just let it hit your stop loss. That's it. So I'm just gonna let this ride. It doesn't matter. But this is just a practice account. So this was Friday's fair value gap on the morning session, and you guys could clearly see if you waited for this fair value gap to get disrespected, which happened right here. You see how this never got disrespected, but this did. You see how it closed below. So what you do is take a short position, right? You enter right away. Take a short position, put your stop loss at the highest of the wick. So I like to put my stop loss at the middle of my fair value gaps. So I leave it up there, and then I target the near side liquidity. So now liquidity is where? Here. There's liquidity here. There's also liquidity here. So we'll probably, I want to see this get taken out first. Then I want to see this get taken out, and then this. And that's it. That's all I want to see. I don't want to see anything else, nothing more, nothing less. And then you guys can clearly see we took all those liquidities for 16 points. And then going back, what did I just tell you guys? Look, didn't it just grab some sort of liquidity here? And look what happened. Like the market does the same thing every single day. It grabs liquidity to continue to move down or continue to move up, whatever it wants to do. And clearly, right now we're in a bearish trend right here. So all the market did was grab some liquidity, got people faked out, and then move. It might make its move, it might not. This is your chance. Either you exit for a minimal loss, you exit for profit, whatever you want to do. Because right here was what $131. So either you could have sold it for 131 right there, or you could have not. It's up to you, but you can't say the market didn't give you the opportunity to exit that position. You know what I'm saying? The market is giving you guys chances to get out or hold for whatever based on your risk tolerance, right? And that's about it. That's literally it. So all I trade, like I said, use the higher time frame. Find use the 30 minute. For everybody, I suggest use the 30 minute. It's one of the best ones to use. Find the fair value gaps. These last couple days we had very high weird wicks. Like you can see these wicks. Look at these wicks. Like we had crazy wicks for no reason because the market is so volatile right now that you do not need 10 contracts. Please stick with 3 to 5 contracts, and I'm gonna say that again and again. Just stick to 3 to 5 contracts. You do not need more than that. If you feel like you're doing more than that, please just lock yourself out and just walk out for the day. That's all you need. You do not need more than that. It just doesn't make sense and it doesn't sit right. You know what I'm saying? It really doesn't. Um, do you guys have any other questions? Because that's pretty much it. That's all I have. Fair value gaps, PO3, and liquidity. The videos are on the education. You guys could watch that completely, and then and then just follow the place.
Oh, that was great.
So should I lock out for now? I can't see your video. It says Aaron, I'll watch the rerun. Bamut, if you're up, bro, if you're up $200, tell me how long it takes for a 9 to 5 person to make $200. So I suggest you just lock out. Wait till New York session. There's no need for you to go back in this because I don't like trading Asia session because Asia session barely has volume. It barely has any volumes. The best session, if you guys are very skilled traders, you guys should trade New York session or London session. London session, you could even ask my boy Mythical. He knows we traded London session like dogs before, and bro, we made shit ton of money and we also lost shit ton of money because of volatility. So it's very good for people that want to scalp, get in and get out. Great, you could do that in London session. Very high volatility. For people that want to just start off and make like $100, $200, try Asia sessions. Very low volume, but you could still make good amount of money. But I wouldn't say hold anything long in Asia session. No longer than like if you're up $100, $200, you should be taking that and exit. You should not be holding that for no reason. It just doesn't make sense. Um, and that's about it. That's all I got. If you guys have any questions, just let me know. But this is exactly what I trade every single day. This is exactly how I get my plays. Like I use the 1 hour and the 30 minutes. When I use the 30 minutes, I go back down to the 3 minute for confirmation of an entry. Like the fair value gaps, like I showed you guys. That's how I enter my position. The 1 hour, I use the 5 minutes, and the 15 minutes, I use the 1 minute. So again, I'll show you guys one more time the fair value gaps. For example, the 15-minute fair value gap right here, right? And then I go back down to the 1 minute, right? And you see how it disrespected. I have one candlestick up, two doesn't, three and four. What I do is take my position from here, target the nearest liquidity. Like I said, this is liquidity and this is liquidity right here. So I'll most likely target this high that wants to get taken. Put my stop loss at the low of a previous liquidity or like literally at the center of my fair value gaps and target that. And you guys could clearly see even though we came back down, it never hit my stop loss. So if I wanted to continue holding for more risk, you could clearly see we hit 42 points on that. If you wanted to sell earlier here and here, bro, that's perfectly fine. If you want to sell here and you want to sell here, that's fine because a lot of people would have panicked and sold everything around here. They're like, oh my gosh, market's coming down, I'm gonna sell everything. You get what I'm saying? It just doesn't make sense. Just slow and steady because it never hits your stop loss, but doesn't mean you can't hold it for your full TP. Yes, you could hold it for full TP if you're a person that's willing to risk it because it never hits your stop loss no matter what. And that's it. And this is exactly how I trade fair value gaps that are disrespected or a higher probability of you making money. That's it. And let's go back to right now. Like, look at this. Look, see you got so you guys see what I'm talking about? For everybody that's new, please understand. Look, market grabbed liquidity, right? It grabbed this liquidity, and then look, it gave you profit here for $131. We How I know that is because look, if I drag this back up here, that was $131. And right now, if you didn't sell that, and now you can't complain that you're down $137. That doesn't make any sense. You guys get what I'm saying? It wouldn't make sense for you to say, "Oh yeah, the market gave you the opportunity to sell. If you didn't sell, that's on you." Like I said, the market doesn't give a crap about your feelings. It does not. There's no feelings. There's nothing of that. If you want to exit earlier, you can before it hits your stop loss. You could do that, right? It's one or the other. You get to pick. So either take your profit or let the position ride to your stop loss, or either add more, which I do not suggest, but that's pretty much it. That's how it should be. Right now, you could clearly see like we're building momentum to an upside. So if it really wanted to, it probably grabbed some sort of liquidity. It grabbed like no, I didn't grab any liquidity here yet. But if it wants to, it could go back up a little bit and drop again, or it could fill this gap. So we just have to wait and see. Wait and see. I don't like trading Asia session until it's like around 8 to 9 p.m., 8 to 10 p.m. usually, because that's when volume kicks in. And there's also news. I believe there's also Japanese current account and it's whatever yen news. So red folder at 1950. So at 1950, we're gonna have some news. That's around like 9 o'clock ish. There's gonna be some news, so I expect volume to kick in from there. So right here, you guys can decide you want to take it out or you want to hold. This is how you do stop loss. By the way, stop loss is you could drag it up more if you think. If you want to take TP, you can take it right here, and that's pretty much it. So that's it. Like that's literally it. Please do not spam this. Like I know some traders, I know a lot of people. One of you guys will definitely do this. Let me just show you guys right quick. Ready? Like you could go up to like so much. You get what I'm saying? Like people will spam the shit out of this money. Please do not do that. Like this is 90 contracts. Like do not do that. You can't do 90 contracts on the account, but please do not do that. Yes, you can make good amount of money, but do not do that. Like please, it's not
That's
worth it.
that's YOLO, bro. YOLO.
Exactly. It doesn't make sense. Like yes, I'm great. I'm up $350 off of literally nothing. But at what look and then boom, you're down. Look at that. Like it doesn't even make sense. Don't do that to yourself. It's not worth it. Just breathe. The market is not going anywhere. You know what I mean? So that's it. That's pretty much gambling. That's what you call gambling. Do not exceed more than this 5 button. A great thing about this is like look, there's a feature here. You could just lock out your whole entire account. This is like one of my friends' account, but you could just lock out completely. Like you just go here and you could lock yourself out and you're done. You don't have to do anything else. Like there's not like if you're done for the day, you just go here. Like I said, custom all day, lock out, you're done. That's it. That's all you're gonna do. If you go to settings, everybody please put that liquidity if you're on evalve to 1550 and put liquidate and save because on top that's your goal because you can't exceed more than that. Some people like to exceed more than that, which doesn't make sense. And I think Bamut, you're one of the person that exceeded more than that. It doesn't make sense. Do not exceed more than the profit target they're asking you. Why work so hard on an eval for no reason? Work the minimum on an eval. Work harder on the combine. I mean, on the XFAs. That's what you should be doing. You know what I mean? And then yeah, that's about it. And then you guys could copy trade multiple accounts you guys want here. Risk setting, like I said, put it at 1550, liquidate, done. This is where you could check your stats for the day, whatever you want to do. You check your stats, you go right here, check your stats. This is where you check the news, right? Pretty much. And that's it. That's all it is to trade. Nothing else, nothing more. Try to keep it very simple, straight to the point. All right. Do you guys have any more questions? If not, I'm gonna just call it a day because I gotta break fast soon too. So let me know if that's it. If you guys have any other questions, please either DM me or please put it on. Like you guys should use the Discord. There's a section where it says question and answer. So if you have any questions after this live, just post it there, tag me, and then I'll get back to it after I break my fast, and then I could discuss everything else with you guys. But like I said, this is exactly how I trade. Right now, what I think Mark is gonna do is completely fill this gap. It's gonna fill this gap right here. Like it has to. There's no like it might not right now, but it's gonna fill this gap. 100%. This gap, like this is like when you see gaps like that, 100% of the time, the market will go and fill that out. No matter what you think, 100% of the time, market will go and fill that gap. And then look, it'll take this liquidity. It will literally just come back, take this liquidity, and just start again. You know what I mean? So that's what market will do. It takes gaps, then liquidity. You just gotta see where else is market, where else is liquidity. Go on the higher time frame and follow where liquidity is at. Right? So that's pretty much it. There's nothing else that I have. I try to keep trading very simple, guys. All I trade is PO3, which is accumulation, manipulation, distribution, and I trade fair value gaps. That's all I trade. I do not trade anything more, anything less than that. That's the only thing I'll trade. So if you guys still don't understand that, please rewatch this video again. And also please watch the education section. There's also videos on PO3s and fair value gaps, and it will make a lot more sense. And then you guys will understand where these plays are coming from. They're not, these plays aren't just random. Like I don't give out random numbers. Oh, I'm taking long from here. I'm taking short from. No, I'm telling you where I'm taking position from. You know, like I'm not randomly just giving you guys alerts from out of nowhere. Like, you know what I mean? Like I give alerts based on where I see price action is. Like right here, we saw London, we saw New York at the end of the day just accumulate. It's a nice accumulation zone. And like for example, this was the 1 hour fair value gaps. So even if you took a short right when market opened and you took this, look at that. This is a 31 point. But we were doing the live, but you know, this would have been a nice short to catch because this was actually the 1 hour fair value gap that you guys can clearly see right here. You see that? It's the 1 hour fair value gap. Boom. Goes down to the 3 or the 5 and boom, look. It disrespected that even if you entered from here. Look at that, still 25 points. Imagine going 5 contracts. Bro, you could have made a good, decent, like what, $300-$400 and called it a day. The thing I like about futures is it gives you the privilege to start trading way before other people can. It opens Sunday at 6 p.m. Eastern time, and it closes Friday 4 o'clock p.m. Eastern time. You get to trade all day, all night. This is Asia session. Then you're gonna have London session, then New York session, and then the market is closed for 2 hours and it opens again at 6. You have all day, all night to trade. There's no excuse to why anybody should not become profitable. The only thing that's stopping you guys from becoming profitable is just yourself in terms of like you're over trading, you're over leveraging. That's the problem. Once you guys learn how to stop doing that, it'll trust me, trading is become so much easier. So much easier. One last question. So if we enter trade at the signal and try to take some profit before TBA, should we wait for another trading hour or can we jump back in? Because if it gives you an opportunity to jump back in, like if it comes back down to a fair value gap, another one, and it respects that, yes, you could jump back in. Sometimes I personally like to take profit before even the TP because I go in with 10 contracts. So when I go in with 10 contracts, I'm up 10 points. I'm up a very good chunk. Either sometimes I decide I'll trim it, like I'll trim maybe like 3 to 5, and then the rest I'll hold for full TP, or I'll leave it at break even. Like I'll just leave it at break even position. And this is how you guys do break even, by the way. So let's say you're buying, right? And you go right there and you want to take profit. If you're in profit, you press this BE, and it will automatically execute you at break even. So if the market comes back down to this price, it will literally just come at break even right there. And then watch, it will probably just come there and just break you out, and you won't lose any money from there. They'll be watching after this. Where will it be posted? Eddie will post the video. He's gonna send it to me, and I'll post it to you guys, and then I'll send it to you. Yeah, speed. Yeah, just like that, bro. Speed, good stuff. That's how you. That's a good risk to reward. Everybody, look at how speed just that. That's a good to risk. A risk. What's called a good ratio that he's doing right there with 4 contracts. That's perfect. Do not. The fifth one should be if you're adding only to winning position. Do not ever add to losing position. It does not make sense. Only add to winning position. Like if you're up right here and you want to add another contract, great. Just press buy again. Only buy to winning position. Do not add to losing. Losing position does not make sense. All right, and then just that's pretty much all it is to trading. That's it. Like right here, like it's giving you an opportunity. You want to close it. All it takes is a click of a button. You're out. You're out. And then if you want to check how much you made, go to your trades on the bottom, and it'll tell you like whatever. If you made, if you didn't, whatever it is that you want to check, you can trade it there. It also shows you the fees per trade that you're taking, and it should be good from there. If I'm winning, I'm raping the buy button. This guy. No, don't do that, bro. That's like, because think about it. If you, like I said, if you build a habit here on combines, when you go to exit phase, bro, you're gonna carry the same exact thing. And then, like I said, this is gonna be everybody. Look, you're gonna be going like this. This is how every day is gonna go look like. And I am not lying because I used to take 300 trades per day. I used to be one of those people, 300 trades. I finally got a reality check, and I'm not. I literally take maybe 6 to 7 trades a day, and that's it. I do not trade more than that. I used to trade 300 trades per day. I used to be one of you guys. Like I used to do this all day. This is me. This is literally me all day. Like, and I used to be like getting lucky. It goes up. I used to get lucky with it. But now it's like, yo, after taking so many L's, like it's not worth. It's not worth pressing that button. Yes, it's so tempting because it's so easy to make that money. It's easy, as easy as it sounds, bro. It's not. It's not worth your mental health because, like I said, yes, you're not risking that much. You're literally maybe risking $50, but think about $50 you blow right now, then another $50, then another $50. Bro, that $50 will add up. Yes, it won't be more than options, but bro, $50 adds up pretty quick. So be mindful of that. Yes, you let's say you mess this account up, you have to go back on the dashboard on Top Step, reset the account again, or you could wait till it rebuilds you at the end of the month. And which you don't want. You want to finish this within the month. Like you want to be done with this. You do not want to be here for that long. Your goal is to get into XFA. What I tell people is when you get into an XFA account, please open up another combine. How you do that? You go to dashboard, start trading another combine. That's it. You do not wanna like stay on that XFA like while you're doing another combine. What I suggest is when you open that combine, trade on that combine for another 2-3 days, get your feet wet, and then go on the XFA and trade there again. When you get one XFA, open up another combine. And I tell that to everybody because you're more than likely you're gonna blow that XFA the same exact week. You're gonna blow it, and it's 100% true. Like a lot of people blow their XFA the minute they get it because they think that they're on top of the world. Like just lock it out and then just go focus on another combine. Once you get your head cleared, you'll be good. Until then, all you're gonna do is blow the XFA. You're gonna be tight. You paid $150, and then you're gonna be like, I gotta restart from square one. Why do that? Why not just make another combine and blow that? If you rather do that, just blow that account instead of an XFA. XFAs are worth money. You know, that's the other advice I always tell everybody. Just do that. You get into an XFA, buy another combine, start with that combine, try to see if you could maintain that and get into another XFA. Same thing. You do that until you get to all 5 maxed out, and then you're good to go. That's it. So all you got to do. All right. I hope this was informative. Like I said, if you guys have questions, please ask during the question and answer. Tag me. I'll get to everybody's question. And like I said, I'm gonna see you guys Monday because I'm gonna be up all night. So anybody want to trade London session with me? Let me know because I'm trying to finish my combine, bro. I have 3 Alpha Future combine, so I'm gonna be up trading all night, and I'm gonna be billing and working all night. So in between, I'll give out alerts, but I'm not gonna officially alert them. I'm gonna post them on the trading ideas. So if you guys want to play with them, you guys can, and we'll all do it together because I'm expecting some good moves to happen this week. So we'll try. If you guys are gonna be knocked out, you guys can be knocked out. I mean, I gotta be up anyways because I got some work to do. So if I'm up, I'll trade with whoever's up. I'll post some alerts, and then we could just trade together. Nothing crazy. Like I said, London session is very volatile. It's more volatile than New York. And like firsthand, I'll tell you that is way more volatile in New York. You do not need to press 5, press 3 or press 2. This is how you like. You see how it's only in odd numbers. If you want to do even numbers, you press this plus or minus. By the way, so if you want to add it up more, you can. So it should be like if you want to put 2, you put 2. If you want to put 3, you could do 3 like that. So and that's pretty much it, guys. That's a wrap. If you guys have any questions, like I said, post on question and answer, and I'll see you guys during the next training sessions. All right.